How to invest in cryptocurrency. Investing in cryptocurrency has become a popular way to build wealth, but it comes with risks and complexities. Whether you are a beginner or an experienced investor, understanding the right strategies can help you make informed decisions. Before we get started, subscribe to our channel and turn on the notification bell so you never miss our latest content. Understanding cryptocurrency and blockchain technology. Before investing, it is crucial to understand what cryptocurrency is and how it operates. Cryptocurrencies are digital assets that leverage blockchain technology, ensuring decentralized, transparent, and immutable transactions. Blockchain is a distributed ledger that records all transactions securely. Unlike traditional banking systems, cryptocurrencies operate without intermediaries, making them more efficient but also more volatile. Understanding the fundamentals of blockchain, including proof of work, proof of stake, and smart contracts, can help you assess various cryptocurrencies effectively. Learning about leading cryptocurrencies like Bitcoin, Ethereum, and emerging altcoins will also help you diversify your investment. Researching different cryptocurrencies. With thousands of cryptocurrencies available, choosing the right one requires thorough research. Bitcoin, the first cryptocurrency, is considered a store of value, while Ethereum provides smart contract functionality. Other cryptocurrencies, known as altcoins, serve different purposes, such as governance tokens, privacy coins, or stablecoins. When researching a cryptocurrency, consider factors like its use case, market capitalization, developer activity, community support, and historical price movements. White papers provide insights into a project's objectives and technical aspects. Staying updated on regulatory news, technological advancements, and partnerships will help you make better investment decisions. Choosing the right cryptocurrency exchange. A cryptocurrency exchange is a platform where you can buy, sell, and trade digital assets. Choosing the right exchange is crucial for security, ease of use, and asset availability. Some popular exchanges include Binance, Coinbase, Kraken, and KuCoin. Factors to consider include trading fees, withdrawal limits, security measures, liquidity, and customer support. Decentralized exchanges (DEX) like Uniswap and PancakeSwap offer peer-to-peer trading but may have liquidity limitations. Verifying the exchange's security protocols, such as two-factor authentication, 2FA, and cold storage, can prevent hacking incidents and ensure fund safety. Setting up a secure cryptocurrency wallet. Cryptocurrency wallets store your private keys, allowing you to access and manage your investments. Wallets come in different types: hot wallets, online, mobile, or desktop, and cold wallets, hardware or paper. Hot wallets like MetaMask and Trust Wallet provide convenience but are vulnerable to hacks. Cold wallets like Ledger and Trezor offer enhanced security by keeping private keys offline. Using strong passwords, enabling 2FA, and regularly updating software can further protect your holdings. Diversifying storage across multiple wallets ensures better security and reduces risks associated with exchange hacks or phishing attacks. Developing a cryptocurrency investment strategy. Investing in cryptocurrency requires a well-defined strategy. Some common strategies include long-term holding, HODLing, dollar-cost averaging DCA, swing trading, and day trading. Long-term investors buy and hold cryptocurrencies expecting long-term appreciation. DCA involves investing fixed amounts at regular intervals to reduce volatility risks. Swing trading involves capitalizing on short-term price movements, while day trading requires frequent trades based on technical analysis. Risk management, such as setting stop-loss orders and diversifying investments across different assets, helps mitigate losses and maximize returns. Managing risks and volatility. Cryptocurrency markets are highly volatile, with prices fluctuating dramatically within short periods. Managing risks involves diversifying your portfolio, investing only what you can afford to lose, and avoiding emotional trading. Understanding market cycles, technical indicators, and macroeconomic factors can improve decision-making. Avoiding leverage trading without expertise can prevent significant losses. Staying updated on global regulations, security threats, and technological advancements helps investors adapt to changing market conditions. Having an exit strategy in place ensures you can lock in profits and minimize losses when needed. Staying updated with market trends. The cryptocurrency market is constantly evolving, making it essential to stay informed. Following reputable news sources, joining online communities, and participating in discussions help investors stay ahead. Twitter, Reddit, Telegram, and Discord groups provide real-time insights and expert opinions. Platforms like CoinGecko and CoinMarketCap offer data on market trends, trading volumes, and historical price charts. Analyzing on-chain metrics, such as wallet activity and transaction volume, can provide deeper insights into market sentiment. Adapting strategies based on new developments and regulatory changes ensures continued success in the crypto market. Understanding cryptocurrency regulations and taxes. Regulations play a significant role in cryptocurrency investments. Countries have different approaches, from recognizing cryptocurrencies as legal assets to imposing restrictions. Understanding the legal status of cryptocurrencies in your country helps you comply with tax regulations and avoid legal issues. Many governments require investors to report crypto gains, making tax planning crucial. Utilizing tax software or consulting a professional ensures accurate reporting of capital gains, staking rewards, and mining income. Staying compliant with anti-money laundering (AML) and Know Your Customer (KYC) requirements ensures safe and legal trading. Investing in emerging crypto sectors. Beyond traditional cryptocurrencies, emerging sectors offer new investment opportunities. Decentralized finance (DeFi) platforms provide lending, borrowing, and yield farming services without intermediaries. Non-fungible tokens (NFTs) represent unique digital assets in art, gaming, and entertainment. The metaverse, blockchain gaming, and Web3 projects are shaping the future of digital interactions. Investing in these sectors requires research into token utility, developer activity, and adoption rates. While these markets present high growth potential, they also carry risks due to rapid changes and regulatory uncertainties. Investing in cryptocurrency offers immense opportunities, but it requires knowledge, strategy, and risk management. Understanding blockchain technology, researching different assets, using secure wallets, and staying informed about regulations are essential for successful investing. Whether you adopt a long-term holding strategy or actively trade, maintaining security, diversifying investments, and adapting to market trends will help you navigate the evolving cryptocurrency landscape. If you enjoyed this video, give it a thumbs up and subscribe for more content. Hit the notification bell to stay updated with our latest videos. Share your thoughts in the comments below. Thank you for watching.